And the good times keep on rolling. Today the S&P 500 was up nearly 2%. In fact, this is the fourth straight day that the S&P 500 is closed up more than 1%. And that's the first time this has happened in 38 years. So if you felt like things were a little bit wild here recently, there's good reason for it. Usually stocks do not act the way that they have been acting recently. But obviously we've got a lot of news to digest with the elections. And at this point, we still don't officially have word who will be in the Oval Office for the next 4 years. It's looking more and more like Joe Biden, but there's lawsuits on the other side of the aisle as well, so who knows where it ends up. What we do know is that the stock market has reacted positively to the elections thus far. So we'll take a look at all that, see what it means for our posture, then we'll get into a trade application example where I wanted to focus on a travel-related stock that's gotten a boost here the last couple of days, but I'm wondering if it's about ready to run out of juice. So another one of those neutral types of trades like the last time around. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 5th, 2020. First of all, if you're brand new, remember to go over to our YouTube channel, click subscribe. While you're over there, check out our description area down below where you can sign up for our email distribution list. We're also heavy users of Twitter. I would encourage you to follow me. My handle is @BrandonVanZ. I've been tweeting out lots of charts here today of some stocks that have been breaking out. So make sure you check out both David and I's feeds throughout the day as we're trying to help you along. And we do really appreciate those of you that click like and retweet on these Market Outlook related tweets as well. And then last but not least, we do have a presence over on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into the action here today. And as is often the case, whenever we have more than a 1% move day, either up or down, I tend to start with this particular view here. And this is chart 6D. Remember, for those of you that are premium members, you have access to all of these different charts that we have here. So make sure you're taking full advantage of your subscription. But this one here is used typically when we have a major day, and today was another one of those major days. In fact, here you can see what I was referencing before. This is our fourth straight 1% up day for the market. In fact, it's the fourth out of the last five sessions fifth out of the last six sessions to the upside, because we had this candle over here that was also up over 1%. Of course, we did have more than a 1% move in between there as well to kind of offset that. But nonetheless, it kind of gives you the sense of how volatile the market has been here lately. And what we've seen in the last 4 days of that volatility has been to the upside. And that generally is a positive thing for those who are positioned the right way in advance. And I would like to say that that's kind of where we've been in this particular portfolio. I mentioned in the intro that we're going to do another neutral trade, so we'll get to that a little bit later, but just a reminder that when we came into the session here today, the vast majority of our trades that we've done under my presentations here have been bullish leading up to the election, and therefore we have the ability to kind of cool down the jets a little bit here after the election, now that we've benefited from that bullishness. Now, one of the biggest movers here today was one of the stocks that we actually had in our portfolio, Grow Generation, ticker symbol GRWG. As you can see, it was up 19% here today, and we, of course, own that long call spread. So very happy with the way that one has been progressing thus far. But as you can see from our deltas perspective here, most of our trades have been positive delta trades. Apple and DocuSign and Grow Generation, all bullish trades. Down below here we have Amgen, MongoDB, and VMC, all bullish trades. And then we got a couple of stocks down below as well as kind of different types of trade setups. But the point being, again, we were positioned for a bullish outcome going into the election, and that was not necessarily an easy thing to do. In fact, I've had plenty of texts from friends and family that said they got out of the market before the election. And while it could have easily gone another direction, I think this time around felt a little bit different to me in that so many people remembered what happened in the election of 2016 that they didn't necessarily want to put up with all of that volatility. And so, the chances of that being a repeat performance where we saw those futures plunge the night of the election 4 years ago, I kind of felt like that was not going to be in the cards this time around, and therefore was more comfortable perhaps than others going into the election being more bullish with our trade setup. So I, for one, am very pleased with the upside activity that we've seen in the last 4 days. In fact, as I was sharing with my question and answer session students today, my top-down trend trading class hit an all-time high today. We've had some stocks that have absolutely skyrocketed. We hit our fourth coffee can stock yesterday. In other words, another stock that has doubled for our portfolio, where we sell half and keep the other half in a coffee can to hold indefinitely. And that's the fourth time we've been able to pull off that achievement here in the last couple of years since we started teaching that class in 2018. So if you're looking for a strategy that is really knocking the cover off the ball right now, at least from the classes that I teach here at Market Scholars, it is definitely the Monday top-down trend trading class. That class is absolutely on fire right now. So anyway, I'll look forward to seeing many of you in that class come Monday, once again, where we see where things will shake out. But we are definitely enjoying this big rally that we've seen here in the last 4 sessions. Now, another thing that we tend to do if we have a big move in the market is try to get a sense of market breadth. And so I'm going to come over here to the Visualize tab, and I'm going to show you that today was a pretty strong day. It might not have been as strong as we saw the other day, but it was still an 80% upside type of a day. I think we saw a 90% upside day a couple of sessions ago, but this one wasn't quite as broad-based, but still a very dominant day by the bulls. 413 of the 500 stocks in the S&P 500 finished higher here today with some really big movers there along the way. There's one that catches my eye, speaking of which. This is one of the stocks that we own in our top-down trend trading portfolio. This is Albemarle right here up there towards the top of the alphabet. So that one caught my eye, but as you can see in this kind of area off to the right-hand side, when we look at these higher bars here, you can see how much it was up. It was up about 13% today. So that's that lithium miner that is kind of a side play, as it were, to Tesla. If you think that the world of electric vehicles is going to be bright, then perhaps one way to play that is through the batteries themselves, and those batteries need lithium in most cases, which is mined by Albemarle and also Sociedad Química down in Chile. So anyway, that stock reported earnings today and exploded higher to, I believe, new all-time highs. Now, one interesting side comment about this was actually one of the stocks that I was tweeting about today earlier. Albemarle is actually a dividend aristocrat company. In other words, it's in the S&P 500 and it's raised its dividends for more than 25 years in a row or more. And interestingly enough, at this exact moment in time, Albemarle is only yielding 1.5%. In fact, let me show you the chart of this real quick just to drive home this point. Albemarle was a 3% yielder very briefly for 1 week back here in March. It went down below 51.33, at which point it was yielding 3% from a dividend yield perspective. So those of you that have been to my classes over time and kind of understand that concept of buying those dividend aristocrats when they have a 3% yield, at least for the ones that traditionally don't have that 3% yield, like an Albemarle, this has been a huge home run for you, as this stock is now doubled from that 3% yield level and now has a yield of half that 3% naturally, right? If a stock doubles, your dividend yield gets cut in half, all things being equal. So we once had a 3% yield, stock doubled, it now has a yield of 1.5%. So that stock has now taken out that prior high from February, and we are now back up here into this kind of area that we were trading back in October of 2018. So this is one of those companies that a lot of people probably don't know a whole lot about. They haven't heard about it all that much, but it is one of those stocks that is benefiting from Tesla and those types of EV types of vehicles out there. Let's go ahead and take a look now at some of our traditional charts. starting with 4B here, and this will just be a 4 grid of the various major U.S. equity indices. And you can see here that things have changed pretty dramatically in just 2 days. Naturally, when you have as aggressive of movements as we've seen, the postures based upon various technical indicators is also going to change very rapidly. So this is about the fastest you'll ever see these types of posture changes take place, and they only occur if there's a major whipsaw that occurs in the market. As just one example here, take a look at what has happened with the NASDAQ in the lower left-hand corner. We went from a weekly bearish posture to a strongly bearish posture to a weekly bullish posture to a strongly bullish posture, all in the course of about a week and a half. Basically, that happened from October 29th to where we're at right now. It is quite rare to cycle through all 4 of those posture possibilities in such a short amount of time. But again, that's the nature of the beast when you have a major whipsaw type of action like we've seen here. And, these are not normal trading days here. Again, this is the first time in 38 years that we've had 4 consecutive 1% or more up sessions for the S&P 500. So where things shake out at this exact moment in time is that we do have bullish postures across the board. The only one that doesn't have a strongly bullish posture is the Dow Jones Industrial Average. One of the more interesting things that's happened since Tuesday, remember when I did this presentation on Tuesday, we didn't have the results yet. We hadn't even started the counting at that point when I was recording this after the market had closed on Tuesday. So one of the most eye-popping things from my perspective that's happened is the intense surge back into the growth stocks. On Tuesday, that was definitely not the feel. We were talking about how, yeah, it was great. We had these big up moves in the market, but a lot of them were kind of some of the areas that had been forgotten about. I talked about the idea of the reopening trade, and we talked about, some of those banks as one example that had been doing well. Well, the temperature of the market has changed dramatically since we started getting the election results. Now, all of a sudden, we are back to those software as a service stocks, those software stocks, all of those hyperactive growth stocks that were in vogue, in the late summer and early fall time period were the superstars once again here in the last 48 hours. You can even throw the FANG stocks in there. If you look at Google, it's hitting new highs all of a sudden. You could look at something like Microsoft. It's kind of erupting there nicely. There's Apple making its move higher. Netflix making a move. Trying to think of some of the others. Amazon, making a move. They're all kind of bouncing right off of those lower levels back up into their chart's upper half of their range. And so that does definitely help the NASDAQ composite kind of kick it into high gear there. Again, you'll notice that with today's move, the NASDAQ was up 2.5%, and we were just talking, last week how we were approaching some of the multi-month lows. Well, in just 4 days, we went from close to multi-month lows to now we're very close to all-time highs, right? The NASDAQ would need to take out this candle from September 2nd, so it's got a little bit of work to do, but, theoretically it could happen as soon as tomorrow under the right set of circumstances, the way that this thing has been going. So we'll just have to see where it takes us, but there has definitely been a change in the tone of the market in the last 2 days, right? We already had 2 up sessions going into the election, but the tone after the election, when we got 2 more up days of over 1%, has changed and has flipped back to those hyper growth names once again. I'd also like to point out that the Russell 2000 continues to impress. You'll notice that the Russell 2000 was up 2.78% here today. Not only was that an impressive showing from a percentage basis, but you'll notice what happened here. Notice the high label shows up above today's candle. This is the only of these 4 indices that can make that claim. In other words, the Russell 2000 continues to lead. And, we saw that develop in my factor-based swing trading class on Wednesday morning. We were talking about how the low size factor has rocketed to the number 1 slot from a factor perspective. And that's, playing out right here in front of us through the Russell 2000 itself. So, again, broad-based rally. Yes, you have themes that are doing better than others, but in general, you are seeing multiple areas, multiple sectors, multiple factors that are all benefiting all at one time right now. So this is just like almost like a FOMO trade. For those of you that have heard that acronym before, the fear of missing out, it's kind of like everybody that went to cash right before the election because they were so nervous about what could happen. And now they're all rushing back into the market all at once. Now, obviously, we're not done yet with the news. We haven't actually determined who's going to be sitting in the Oval Office. So, we still need to be vigilant as far as, what sorts of news headlines could come out and throw a wet blanket on this party right now. But right now, it seems like everybody wants to party. Everybody's out there in the streets and dancing, so to speak, in the stock market. So it's been a fun time to be witnessing some of the things going on in the stock market in this very short week that we've had so far. 4 days in a row, upside, upside, upside. So as it stands, we do have bullish postures across the board. We do have green moving averages as well, telling us that price is above rising moving averages in all of these cases. So very, very bullish indications at this point. Let's go ahead and take a look at our 3 green arrows chart, because I'd imagine we probably have some changes there as well, and we do. Remember when I was with you on Tuesday, at that point, things weren't looking so hot. We were starting a move higher, so we were kind of rounding the corner, but we hadn't actually run to home plate yet. We were running to second base, but we hadn't rounded third and into the home plate yet. Now we could kind of make that claim that we have. We have now flipped to a 3 green arrows charts in all 4 of our charts cases, and most of them happened just today. We had it yesterday on the S&P 500, but on our other charts, we actually just got it today. The reason we got it just today on the Dow Jones was the MACD histogram flipped to green today. Same thing for the Russell 2000. It flipped to a green arrow here today, and the same thing for the NASDAQ composite. It was the MACD in all 3 of those cases that was kind of the last holdout, and it flipped here today. So right now, not only do we have bullish postures from a market forecast intermediate perspective across the board, we also have 3 green arrows postures across the board as well. So this has all of a sudden turned into a much more interesting time to be a trend trader. And again, if you need help with your trend trading skills, join my Monday top-down trend trading class, where we are hitting it clean right now, all-time highs across the board. Let's go ahead and now take a look actually before we do that, let's pop on over to the internet very, very briefly. I always like to take an opportunity to say thank you to those of you that help support David and I on social media. In particular, we keep our eyes on Twitter because that's the social media platform that we are most active on. And I generally am trying to get triple-digit likes whenever I take a couple of hours out of my day to do these free videos for you guys. So if you appreciate the effort that goes in to generating the trade ideas, sending out the notifications, et cetera, make sure you just take that 5 seconds out of your day to share your appreciation by clicking the like button there for us on Twitter. We want you to do that because it helps promote our business to a much wider audience than we would be able to on our own. It benefits you because you're training Twitter's algorithm that you want to see more of that type of content on your timeline. So you can get a couple of benefits out of that on both sides of the coin, and that helps us feel more comfortable for soaking up as much time as these videos take, right? David and I are both busy business owners, and we don't have a whole lot of opportunity to take a couple of hours out of our day just to do something for free. So we want to make sure that if we are going to do that for you guys each and every day, that you're helping support us as well, so we can get a little bit of benefit out of that. So thank you to those of you that have done that. Please continue to do that for us. Also, earlier today I taught my question and answer session, and David taught his portfolio management with ETFs class. Those file recordings are not back from WebEx quite yet, but we'll get those posted to the calendar later on tonight for those of you to watch the recordings. And then tomorrow, David has his very popular technical analysis class at 1 p.m. Eastern Time. Remember, if you've ever wanted to learn technical analysis from a chartered market technician, that is your opportunity every single Friday with David Settle. There's nobody better in the business at it from my perspective. So make sure you're checking out his classes as well. All right, let's go ahead and get into some of our 12 grid analysis now. And We're going to start off with the asset classes 12 grid. There was one move that really caught my eye today, and it caught my eye from the stock perspective. I hadn't actually looked at the commodity yet, but now that I look at the commodity, it is confirming to me why it was an impressive move. And what I'm referring to is gold. I had noticed, we do own one gold company in my top-down trend trading class, and it was up like 7% today. And I had noticed a couple of others kind of scrolling by on CNBC. So I figured it must have been a big day for gold, and indeed it was. Notice that GLD was up 2%. This is kind of that day we've been waiting for. We've been talking about gold endlessly for the last 3 months of this chart, saying that I'm not impressed, I'm not impressed, I'm not impressed. In fact, for a while, I was so not impressed that we took a bearish trade on a gold mining stock, and we made max gain on that. It already rolled off our books with the October expiration. So right now we don't have a horse in the race, so to speak, from a gold perspective from this presentation's trades. But I've been keeping my eye on it because we've been kind of grinding a little bit lower, a little bit lower, a little bit lower, largely trading below that falling moving average there for much of the last 3 months. Let's call it 2 out of the last 3 months, we've been stuck below that moving average. And I've been mentioning along the way that I'm waiting for a breakout in either direction. You're either going to break down or you're going to break up. Today could have been that day. This was an emphatic candle right here. This is a 2.3% up move on one of the world's most important commodities. So in doing so, not only did we bounce up and off of that 30-day moving average, but you can also see that we cleared this resistance point that was kind of a double top right here and right here. So that would have been October 9th and then again here on October 21st. And we cleared clean through that. And sometimes you will go through a resistance point on an intraday basis, and then you'll close back down below it. That was not what happened here. This was a strong move. We closed near the highs of the session for GLD. So if we've been waiting for our sign, this could have been it. I'm going to turn much more bullish on gold at this point forward. Doesn't guarantee anything, obviously, but you've got to kind of set your assumptions up for when you're trading these markets. And I was in a hesitant mindset about gold up until today. I have now changed to a much more robust tone, much more bullish mindset towards gold. And it doesn't mean that this thing is going to rocket higher from here. Obviously, you've got plenty of resistance areas along the way from where we were trading back in August. But this is very constructive activity. Notice even this low right here on October 29th did not breach that prior low at the end of September where we put in that oversold cluster signal. So that's important as well. You could probably get away with calling that a bit of a double bottom down there. So the fact that we protected those levels, worked our way back to the moving average, and now launched way off of the moving average, clearing that resistance, I think that's a very positive sign there. So let's keep our eye on that activity. My mindset is now back to potentially looking for bullish gold mining setups as well if this behavior continues. Now, as you can see, the reason behind that big gold move could have been the US dollar. The US dollar was kind of meandering sideways and sideways and sideways. This is a pretty bearish strike down that took place here. You can see UUP fell by nearly 1% today, which doesn't sound like a lot, but remember, we're talking about some of the most liquid currency markets on the planet. So when the dollar moves an entire 1% in one day, it's a big, big deal. So you can see here that UUP actually closed below where it closed on October 21st. And you can see that the moving average is red. So again, notice the flip-flop of those two charts. Gold, strongly bullish intermediate posture, green moving average. US dollar, strongly bearish intermediate posture, red moving average. So if you expect this to continue, in other words, we have a break of the dam here, and if you think that water is going to come flooding out to the downside on UUP, you have a very good chance of seeing continued constructive activity there in gold. So I really want to pay attention to that particular trade setup going forward. Other areas to be aware of, we saw some really robust activity here out of EFA, which is the foreign developed stocks. Remember, they were laggards up until about a week ago, and then they really started moving in a hurry. Notice how close we are on EFA to multi-month highs. I mean, we are just a day away from that, theoretically. Prior to this move, it kind of looked like EFA was in a downtrend. So that's why this has been a surprise move. There are some moves that are less surprising. There are other moves that are quite surprising. And I would put this in the latter camp there. I don't think a lot of people were expecting this. Now remember, we've already been pointing out the bullishness in EEM, the emerging markets. That had been evident for a while, but we started to see this separation between those two areas where the developed markets were really struggling compared to the emerging markets. Now all of a sudden it's a closer horse race. We do still see EEM dominating with nearly a 7% performance in the last 3 months, whereas EFA, the developed markets, are only up 3.5%. But they've closed the gap dramatically. You know, just a couple of days ago, we were looking at EEM positive over the previous 3 months, whereas EFA was down like 4% during that time period. So they've closed the gap dramatically there. The question is, where do we go from here? And that's a really aggressive move there where perhaps we're getting a little bit exhausted. So I wouldn't be surprised at all if we do take a little bit of a break up at this area here, kind of rest for a few days before determining whether it's got another run in front of it or not. So keep your eye on that possibility as we're now up here at this horizontal resistance area. Let's go ahead and now take a look at some of the sector action. And that's going to be chart 5C. And here you can see we've got a clean sweep for the bulls. We've got green, 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 green. And all of these have different features to them naturally. Not all sectors are going to move in unison with one another, but what they do share is that common element of all trading more bullishly today than they were a week ago. And so that has now been reflected in the posture of the intermediate line on the market forecast technical indicator. In fact, things have firmed up so much that energy is actually the only one that's not trading above its 30-day moving average. It's trading right at it, so I don't think it wants to be left out of the fun, but I think we all know the woes of energy. In fact, we talked about one of the higher yielding oil and gas companies in my question and answer session earlier today, and talking about the struggles of the energy patch in recent years. So these are stocks that are hard to trust even when they do make moves, but I would call this move in energy quite disappointing, quite frankly, because energy had been so far out of favor that you would expect that if we had some sort of a massive rally in the general stock market, which we've had, that those that have been beaten up the most could have that dead cat bounce that was even more aggressive than the other areas, and we're not really seeing it play out that way. You are seeing other areas of the market really benefiting, but energy stocks going up, yes, but considering how much they've lost in recent months and years, you're probably quite disappointed from the rebound that we've seen in energy. Otherwise, we've had some spectacular moves across the board. Look at materials today. I mean, you don't see this very often. Materials was up 4% today. I'm not talking about one stock like Albemarle. I'm talking about an entire category, an entire sector up over 4% in one day. I mean, that is awesome. And not only that, but look at where the candle lands here. We went right through this previous double top area on materials. Now remember, materials were already leading. We've been talking about materials endlessly in my top-down trend trading class for the last month and a half because materials have been part of the top 3 sectors, and that's why we own Albemarle. But this is a little bit surprising behavior that it was able to get through that prior resistance with so much ease and to do it on such an aggressive day and in such an aggressive manner. 4%. That is a massive move there for an entire sector. Normally we'd be ranting and raving about technology. Technology was up 3% today, but that almost looks like an afterthought compared to the materials. Technology does have a lot of work to do. Materials is kind of in one of those trend continuation moves right now. Right? And remember, materials have not performed nearly at the level that technology has over the last 5 years. So there could easily be more upside potential in the materials going forward from this point than what we might see in the technology space because they've earned their reputation for many years at this point, and they've got a little bit more overhead resistance there. So of all these charts, I think it's the materials one that looks really, really impressive to me right now. So keep your eyes open to those opportunities. In fact, we talked about a chemicals company in my Q&A class earlier today as well as one of those possibilities of a breakout candidate. So, all of those chemicals companies, steel companies. We already talked about how gold miners are breaking out. Remember that the industrial gases companies are generally a pretty good bet, your Air Products and your Lindy's of the world. So that area is cooking right now. All right, let's get into our trade application example, and let's talk about an area that maybe they've started to cook here more recently, but have not really benefited hugely over time, and that is the airlines. Here is Delta Airlines. I noticed several of the airlines were up nicely today, but remember, we've seen this behavior in the past. So ticker symbol DAL here, you can see it was up about 5% here today, and that move was a big enough move where we pushed ourselves back up over that uptrending 30-day moving average, and we flipped from a pink background to a blue background. Now remember, on this chart 3A, that basically means that the near-term line has turned to bullish. But at this moment in time, I'm not sure how much I trust this move. In other words, this particular stock had topped out here back in mid-September at 35 bucks, and then it went down in a big way, rebounded, and has really spent a lot of time just going sideways. And so those are the types of setups where I'm thinking to myself, let's explore a neutral trade, right? And I'm at the luxury of having a very strong hand here for the reasons that I already mentioned in the presentation earlier. Remember, our portfolio is already bullish. Some people are going to be chasing this market that we've just seen go up for 4 straight days. We were already positioned for that move in the last 4 days. So I don't necessarily feel like I need to chase all the hottest stocks at this moment in time. We're already in good shape. We put ourselves in that position. So now I'm in the mindset that if I've already got a bullish portfolio that will benefit if the market keeps on going up, let me see if there are opportunities out there that I can make some money on if the markets don't continue to move up. Now, I'm not necessarily predicting that the markets are going to now collapse to the downside. I think we've had some pretty constructive bullish activity here recently. My question is, have we started to exhaust ourselves after 4 straight 1% up moves? Again, to put that into context, that's only happened, I think, 3 times in history, and the last time was 38 years ago. So these are not normal times that we're at. You wouldn't expect us to, let's say, have 4 more 1% days in front of us. In other words, we're probably getting to a point where we might have a sell-off day or 2 in front of us. So I want to look for kind of those neutral opportunities, and so I chose Delta Airlines for it. In fact, let me do this. This chart doesn't even show my break-evens here. So I'm going to go to a 6-month chart instead of a 3-month chart. There we go. I chose to sell an iron condor on this, and as I explained to you in a recent presentation, an iron condor, for those of you that are not as familiar with it, is when you're the seller of it, you want neutrality in whatever security that you are trading that iron condor upon. You are not looking for directional trading. You're not looking for a big move up or a big move down, right? With Grow Generation, as I showed you before, that was a directional trade that we put on. Remember, that was a long call vertical spread. It wasn't even a short put spread. It was a long call vertical. So we really needed a directional move when we put on that bullish trade there. And again, broke out to a new all-time high here today on this one, up 21%. But they do have earnings coming up, so stick with me on that. Those of you that are premium members, remember you have access to my Telegram trade alerts, so I will let you know if I decide to get out of that spread before earnings. Anyway, point being, compare Grow Generation to Delta Airlines. We're talking about 2 different concepts here. Grow Generation, that was very much a directional play that I had set up. We needed a move, and boy, oh boy, did we get it today. With Delta Airlines, what you're saying when you're selling an iron condor is, please, let's not have a move. Let's just keep on going sideways, status quo. And that's where we are at right now. I've already placed this trade, and as always, I've sent out the telegram ahead of time to those of you that are premium members of Market Scholars to give you an opportunity to digest the trades before everybody else on the free YouTube videos. So the trade's already done. My break evens are already established. If you need to see the strikes that I did $2 wide on each side. That information and the fill prices and the screenshots and all that are on the telegram for those of you that are premium members. But for everybody else, just understand this is a neutral trade that I'm setting up here, where my upside break even is at 38.56 and my downside break even is at 26.44. So for those of you that are newer to trading iron condors, basically what I want to have happen for the next 45 days or thereabouts, these are the December monthly contracts, I just want this stock to stay within this range. And you can see that for the most part in the last 6 months, that's pretty much where we've been. Now, I kind of got rushed at the end of the day to place this trade. Looking back, I maybe should have adjusted the strikes just a little bit and chosen maybe a strike $1 less on the upside and $1 less on the downside. That might have pushed this bottom line down below these other candles right here, and we still had a little bit of upside potential right there. So I'm positioned right now to take a little bit more heat on the upside for Delta Airlines here than I am on the downside. So if you do predict that the stock market's going to be more bullish than bearish going into the end of the year, then that extra dollar of upside wiggle room might very well come in handy with this trade. But that's what I've got for you. Basically a neutral trade on a stock that has made a move here in the last couple of days, but still puts us right back into the dead center of where its range has been in recent months, as I'm wondering if the stock market itself is a little bit exhausted after 4 straight 1% up move sessions, and we might be due for taking a little bit of a breather in the general stock market and potentially a breather in this stock here with Delta Airlines as well. Okay, so that's what I had for you here tonight. I hope you got benefit out of listening to the presentation. If you did, you can take 5 seconds to do me a favor and click like for me there on Twitter. Remember, you can do that right there on our website. If you're watching it on our website, underneath the video, you'll see the little Twitter widget. You can go directly to Twitter, where I'll have this pinned to the top of my timeline. You'll also be able to click into it from the description area if you're watching this on YouTube itself. And then we also put a link to this tweet in our email distribution list for those of you that are on that. So 4 different ways to make it nice and easy for you to help support this project and to help encourage David and I to continue to produce these free videos for you each and every day. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.